Hi everyone, let's cover my Elliott wave scenarios on Solana, starting with what happened since the last two times that I covered it. First of all, 2nd of June 2024, price just started to range around 150 bucks over here, and we were looking for a bigger three-wave corrective structure to the downside to move into the wave 4 white box. Now that was done with this wick, and then on the 15th of September 2024, looking for price to move to the upside, take out the previous all-time high, and then get a retracement to the downside. This retracement in a bullish scenario should then be a wave 4, and in a bearish scenario, you were looking for price to create a high here and a bigger retracement to the downside. Now you can see that price took out the high, we got that move to the downside, which then brings me back to this chart. In a bullish scenario, this is going to be part of a bigger wave 4 in blue. Common target area here, the 236 to the 0.5, 129 to 58. Inside this target area, there are two main areas of support. First of all, the point of control at 100, which is a level that we covered many times in live streams, which currently acted as support. And to the downside, we still have an area of support at 63 to 56. However, preferably, I don't want to see wave 4 go that deep. Wave 4 of a higher degree tends to retrace to the price section of wave 4 of a lower degree, which is this area here, and that is exactly what we got at the moment. If you move all the way down to 50 to 60, it's very deep for a wave 4, and you start to really significantly increase probabilities that this is a finished structure, and you look at a bigger move towards the downside, even though the invalidation for 4 is 40, being the 0.618. Now in this scenario, we preferably then create wave 4 and then look for wave 5. That means that sooner or later you want to see a 5-wave impulsive structure to the upside, followed by a 3-wave retracement. Once this 3-wave retracement is confirmed, you look for price to take out this high, likely the all-time high, and then look for your wave 5. The target area for 5 is 325 to 888, which is a very big target area. But depending on future price action, we can then minimize this area and become a lot more accurate. Now, something that I do like to highlight is that generally a wave 4 is longer than a wave 2. And if we take a fib time from the start to the end of 2 to the end of wave 3 and toggle on the 1, then preferably a wave 4 would finish after the 26th of May. Side note is that this wave 2 is quite lengthy in time compared to a very short wave 1. And effect 2 is quite long compared to wave 1, can increase probabilities for wave 4 to be shorter than 2. But if you would look at the data, if wave 2 is long in time, then generally wave 4 is still pretty long in time, so that's at least something to consider. Something else that I like to highlight is the channels. So channels are very important in Elliott waves. I made a whole educational video about channels here as well, the best way to use channels. Make sure to check it out. It is in this playlist on my channel. And this is what's called a base channel. Now, a base channel is pulled from the low to the low of 2 to the high of your wave 1. What you like to see is you like to see wave 3 move outside of the channel. Wave 4 comes back to the channel, and then you want to see wave 5 again move away from the channel preferably. Now, what you don't actually really like to see is a wave 4 to touch the lower trend line or get this close, because we just missed out by touching this channel by a hair, just a few dollars, which is not really favorable for the bullish scenario. So this is something that we do have to keep in mind. If we look at the trend channel, which is taken from the end of 1 to the end of 3 to the end of 2, then preferably your wave 4 breaks the lower trend line, which is what happened over here. But it's just that the base channel is not really great for this particular scenario because we got so close. Now, the bullish scenario arguably is still quote-unquote bearish, because even if you do take out all-time high, you move into a wave 5, which is going to take weeks, if not months, for that to play out. You're still going to look after 5 for a very big move towards the downside and a big bear market to come, right? In a bearish scenario, that already started. So here you have your 1, 2, 3, 4, 5, right? High made, and you already look for a bigger retracement to the downside. Now, this retracement can have many different forms, like a zigzag, double zigzag, a flat structure, a more sideways WXY. we'll have enough time to figure out what happens. But in general, your minimum retracement target is the 0.382 at 74. Common target area is the 0.5 to the 786, 48 to 17. The golden pocket, always important, around 30, which is in confluence with a very big support resistance area here on the chart. So that is definitely an area of interest. Now, in this scenario, we then also have, once again, a couple of channels. This is the base channel, right? Taken from the same pivots, low to the low of 2 to the high of wave 1. And in this particular scenario, you can see that wave 3 is now finishing here, right? Not here. So we moved wave 3 to the left. Wave 3 ending above the channel trend line, which is nice. Wave 4 came back to the base channel. That's what you like to see. And then you have wave 5 moving beyond the channel upper trend line again, finishing over here. That's perfectly fine. So this channel works for the bearish scenario. And if we look at the trend channel taken from high of 1, high of 3, low of 2, then this wave 4 moved to the lower trend line and it was touched here as well, which is something that you also like to see. So the channels do work well with the bearish scenario. Now, in both cases, if we simplify both of the scenarios without all of the detail and the exact Elliott wave counts, in general, you're going to be looking for price to eventually move to the downside. We have a bit of a grind in the beginning, quick move to the upside. That is going to be your wave 3. And then you get into 4 5s. Now, wave 4s and wave 5s can be incredibly messy and very complex. Wave 4s tend to be complex corrective structures. Also, from a swing trading or investing perspective here on the weekly time frame, once you start moving into wave 4s and 5s, you get into take profit areas. As a day trader or scalper, there's of course always a local trade to be had to either the up or the downside. But from a swing perspective, it now becomes very important to consider waiting for a nice 5-wave structure and then a 3-wave retracement. And if you see this, yeah, we could be looking for price to move up, take out this high, possibly all-time high, and look for a wave 5 to still be part of that structure. And after wave 5, we still look for a bigger bear market. Now, how I personally approach my trading on such high time frames, right, like swing trading or even investing, is of course that this is the area to join the move. This is, once we start into 4 5s, I personally always take profit. And once we have the potential of a finished structure like wave 5, I like to exit completely. And then I just wait for new structures to form. And when price is showing me that what's forming here is corrective and we get into a more sideways range, as preferably, I wouldn't actually really like price to move below that point of control support here. So if price does move into a more sideways corrective structure, eventually creates a 5-wave impulsive move and a 3-wave retracement, then that is a great moment to possibly join again and look for price to move up, at least taking out this high, possibly all-time high, and then maybe even get that wave 5 and still be part of such a move towards the upside. But now, of course, the risk has increased because of this high being a potential end of a 5-wave impulsive structure, so it requires just a lot more patience. And if we then finally shortly look at the move to the downside since the all-time high, the main question we want to answer is, can this move to the downside be a high probability impulsive structure? Because if the answer is yes, you look for a retracement and you're always going to expect much lower prices. So here you can see on my chart a wave 1, 2, 1, 2, 3, 4, 5, 4, 5, which means that this low is then either wave B or a wave X. And you can also see that wave 4 touched the 0.618 Fibonacci taken from the end of 2 to the end of 3, which generally acts a bit as an invalidation for a wave 4. It is incredibly rare to see wave 4s retrace to a 618. However, the official rule in Elliott waves is that wave 1 and 4 are not allowed to overlap in an impulse, and that is not the case. This low and this high on my chart here do not overlap, so that rule is still met. I have seen, I think once or twice, maybe a triangle wave 4 where the 618 is touched in wave A, but then wave E is finishing below the 618. So, that is maybe something to think of, but definitely take this with a bit of a grain of salt, as it does impact the probabilities of this being a clean impulse to the downside. You rarely ever see this. So, one potentially have to think about zigzag family structures here to the downside. So my final thoughts on Solana is that in general, we are expecting a retracement to the downside with or without taking out the high one more time. Wave 5 is either finished or you create one more high in 5 and then eventually get the big bear market. Moving into wave 4s and 5s is always a take profit area. Patience required to see what price is going to form now. Do you get a corrective wave 4 or potentially a bigger retracement? And also the move to the downside here does feel a bit corrective with that 618 touch for a wave 4. However, I do like to wait for a bit more price action over here. If price can confirm a corrective move towards the downside and also create an impulse 5-wave move up followed by a 3-wave corrective structure, it could be interesting to join and look for potential higher prices. I hope that this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott waves without even counting, and on the right is the Elliott wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.